Hello, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:54 a.m. Central Time, and I am recording this in preparation for the market day of September the 11th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, let's see what we had going on in the overnight. A little bit of weakness, but nothing terribly frightening. The S&P futures are down by 9 points, or about 0.5%. Russell's down by about 1/3%. Nasdaq's down about almost 2/3%. Dow is down about 0.4%. Crude oil is down much larger, down 2.61%. Euro down a fraction. Bonds up about 0.5%, and gold down about 1/3%. In overseas action, China essentially scratch. Hong Kong down about 1/4%. Japan down about 0.2. Germany down about 0.9, and United Kingdom down about 1/4%. In terms of macroeconomic reports for today, you have the PPI, core PPI, preliminary University of Michigan consumer sentiment. That one coming during the cash market at 9 o'clock Central. So be aware of that one. That one always seems to kind of mess people up. And actually, that was 10 o'clock Central. Sorry about that. In terms of volatility, you have skew still relatively high, but not as high as it was yesterday. It's at 131. Short-term VIX at 26.11. So a couple things kind of elevated there, but certainly not as high as they have been of recent. In terms of current IV percentiles, you have the S&P at 46, Russell 43, Nasdaq 43, and Dow at 60. So those are all kind of around their annual averages. Certainly not as high as they have been in recent days, but certainly much elevated from what they were, say, 3 weeks ago or so. Standard deviation moves, none were put in yesterday across any of the 4 broad market indices. And indeed, you see things are starting to taper off. Certainly, this is still a very high number of standard deviation moves for a 2-week period, but a lot more ones than 2s and 3s, which we had occurring in the later part of August. We're likely, let's go ahead and pop over to the charts. We're likely to see some compression. You can draw this as a pin and a triangle. I've seen some try to put an ascending triangle on this, drawing a flat top here and then the angle coming through here. I myself, I think I would draw this as a triangle. But bottom line is that we're likely to continue to see this compression until we get to the Fed. So a lot of probably choppy action for the next 3 trading sessions or so before we get some of that information out of the Fed as to what their intentions are. And this is pretty much represented across all 4 of the broad market indices. Russell here, Nasdaq. You can make more of a case for an ascending triangle here with a flat top. This one's a little bit more obvious there. And then the Dow, same thing here. So bottom line is that you've got a situation where we seem to be getting some compression, and along with that, likely really choppy, poor follow through, especially for intraday traders, and for swing traders, probably not likely to actually fulfill any targets in the next few days unless you are taking really small targets. And that would be difficult against the size stops you'd likely need to be able to have a probability of getting anywhere in this kind of chop. So just be aware that the market conditions are not terribly conducive, and we tend to be a little conservative here. For us, it's mostly about an analysis and management of our risk, and against that, we apply our strategies, and we will willingly sometimes miss some of the bullishness that might come out of a bottom pattern and start that move up, and we'll willingly be a bit slow to go all in on that kind of a pattern. Whereas on the flip side, we'll be really very sensitive to increasing risk levels and protection of our capital as risk is increasing and bearish conditions are increasing. And so that's just kind of built into the system. You should be aware that it is one that we find works well for us. Some folks might be more aggressive in trying to pick that value bottom and maybe even average down. That's not really the way we do things. But that's kind of the bias that's kind of built into this. So we will be relatively quick to recognize and take action on increasing risk, and we'll be a little bit slower to take action on lessening risk, and that is by design. In fact, one of the things here, you notice this IBD status uptrend under pressure. We took a look at the 2015 record for confirmed uptrends, and there's actually been now 8 periods of confirmed uptrend in 2015, and of those 8, they lasted, many of them had failure very, very quickly. 2015 has been a very difficult marketplace for the bulls and any kind of follow through. And these confirmed uptrends from the IBD status have lasted 4 trading sessions, 3 trading sessions, 13 trading sessions, 2 trading sessions, 5, 31, 6, and 1 for the most recent one. This most recent one lasting only 1 day before it went back to uptrend under pressure. And indeed, that one period of 31 trading sessions, that took place from May the 15th to June the 25th, and yet during that period the S&P lost 12 points. So you can see that that certainly is weighing on us. These current conditions have not been very good for follow through, and it's certainly part of our bias as we measure the level of risk in current market and how well, what the probabilities are for our trading in terms of being able to achieve our targets. And indeed, our current portfolio investor posture, and we look at something of a consensus across several different measures here to kind of get our overall posture. But IBD is indeed uptrend under pressure. Our accumulation distribution score on the S&P is a D, NASDAQ an E. GMI index, that's a 0 out of 6, and that has had a sell signal since August 24th, and that author is in cash. Primary market condition is a strong bear at this point, and you see also from stock charts, the decision point scoreboards, all down arrows. So obviously you can see an easy consensus across those systems, all being really quite bearish. Intermediate term market posture is a very weak bull, very weak bull. Indeed, you see you have on the S&P 32.4, and these just went up just mere increments between the last 2 trading days. Dow 38.7. NASDAQ is the most bullish at a 52.3. This is outright bullish at that level. Russell also weekly bullish at a 31.8. Position sizing opinions, no change for today between the two systems. So one for the portfolio position sizing, that one's at a 0. And for the volatility-based system, that one currently is a 50% position size opinion. So kind of keep that in mind. Overall hedge warning status remains a level 2. This is our red light. Certainly increased risk conditions and not very promising opportunities to initiate new core portfolio positions, or even for that matter swing trades in a bullish direction. You see from a volatility based metrics, market and decline warning is still in present, though the short term that one did fall off. So that one actually improved yesterday. We still had the VIX over an 18. We still have a distribution day count of a 1. That count obviously reset and started anew here in the last couple days. VIX phase has been increasing in general. Skew is still up over a 130, so that's something of a warning. And you have from New York Stock Exchange the new highs, new lows yesterday, pretty benign, but 3 times as many new lows as new highs were put in yesterday. So you see, even though yesterday was an up day, breadth on that up was relatively poor, at least as measured by the New York Stock Exchange. On the positive side, the risk aversion indicators, all 5 are currently risk on, and some of them are looking, pretty decent angles to them. So that is a plus. Overall opinions still remain the same from yesterday. No change here. As you can see, option income strategies, VIX is outside the acceptable window, and cover call strategies and put selling really only for the most aggressive and nimble, and in that case, probably would want to consider scaling in, using defined risk positions like credit spreads, and making sure that you are taking positions in stocks that you are willing to own, and your position sizing in a manner that you are willing to own those shares. So very, very conservative approaches there at this point. Sector specific, you see while there's a couple sectors, technology and transportation had a couple time frames pop up into the up. Most of these are still decidedly weak across all 3 time frames and across almost all sectors. Yesterday's action, it was overall it was up day, but with the exception of perhaps healthcare and information technology, most of these are relatively small increases, and have taken them the 5-day up to relatively small increases. So could quickly be nullified, and indeed with the weakness that we've had in this most recent overnight action leading into today's cash market open, could very easily turn all this red again. We'll see where that goes with the open today, in which direction that goes. But this has been, a really, really, really kind of choppy market and very difficult to achieve, target goals for trades. Well, that should be enough for today. As always, if you find what you're getting here is helpful to your trading, we always appreciate your retweeting us to your Twitter followers or your StockTwit followers. Same thing with Scootify. Obviously, with YouTube, in that system, you hit the like, and of course, you can subscribe to that YouTube channel. That'll give you alerts that we have posted that day's video. More information about what we do and how we actually put these principles into our systems. Disclaimers as always. Hit the pause button if you need more time to review the disclaimers. And then, of course, we will see you back here tomorrow morning before the market open. And actually, I guess it'll be Monday morning before the market opens with the market preview from Falcon Global. Good trading.